Today I'm speaking with Ian Ball, who's the president of Abitibi Royalties, a Canadian-based company. Ian has a lot of experience in the major gold mining company Goldcorp, starting in 2004, then McEwen Mining, and now Abitibi Royalties. So welcome.
Thank you, Tim.
Ian.
Thank you for having us.
Thank you for having me in Canada. Now tell me about Abitibi Royalties. You've had a lot of experience with some major gold mining companies, and you've seen it through the full cycle from exploration through to production, as well as developing offshore in Mexico. Well, not offshore, but in Mexico. Tell me why Abitibi Royalties and why now?
Well, Abitibi Royalties has quite a good value proposition to start with. We hold, or will be holding shares in Agnico and Yamana that have a value of approximately 40 million, and we have a market cap of 35 million. So just from a value standpoint, it's quite unique. By that, we have a significant royalty on portions of the Canadian Malartic mine, which is the largest gold mine in Canada. So there's good cash flow expected, as well as exploration success in the future.
Tell me where Malartic is, because the company is called Abitibi. Is this related to the Abitibi Greenstone Belt?
That is correct. The Malartic mine is just outside of Val-d'Or, but is in the Abitibi Greenstone Belt, and that's how it got its name.
Now tell me about your investors, and I know everyone wants to hear the great story, but what do investors not like about Abitibi Royalties?
Well, one thing is we have a very small share structure or share count. We have 10.5 million shares outstanding, but only 3 million shares that are in the public float. So there's not a lot of trade and liquidity in the shares. From my perspective, I've looked at different models such as Berkshire Hathaway, which don't have a lot of shares outstanding. And the idea is to attract the right type of investor, one that is more as a partner, that's going to be there for the long term, versus somebody who's going to be there owning shares for a month. So although we don't have a lot of liquidity, I'm quite happy with it.
So you're very focused on shareholder value, and this kind of reflects your personal goals as well.
Well, the idea with Abitibi was to create what I would term the best gold company in the world, and that is the one with the best performing share price, because as an investor, you only want to see your share price go up. The size of the company should be irrelevant. And with the structure that we have today and the assets that are in the company, not only have we been one of the best performing gold stocks over the past 12 months, I think it has set us up very nicely going forward.
Can you give us an outline of exactly what shareholders are looking at in terms of your asset portfolio?
Yep.
And how you grow that value, the mechanics of it?
Well, first off, if you look at it, we do have the shares in Agnico and Yamana, which I think provide a very good backstop of value. We have cash flow that's expected to start up in just a few months' time, and that will continue on each quarter and grow as the quarters progress. And then we have the royalty on a new discovery called the Odyssey North, which is right beside the Canadian Malartic mine. It's very early stage, but in terms of size expectation, it appears to have good promise. And as Agnico and Yamana develop that property and have more success on the property, the value of the royalties that we hold are going to increase in value above and beyond the cash flow that's expected.
Because you're not actually obligated to put capital in for developing these projects.
That's what you're looking at today is a royalty that we get a percentage of the revenue. We put up none of the costs, and it's not like streaming. Streaming has become very popular today, but streaming has, I think, fixed upside. You buy a certain amount of ounces at a certain price. Here we get a percentage of the revenue of all production, and it's infinite. It goes on until that property is exhausted, so there's no deadline. And
so do you have a flow of projects or properties that you're looking to fold into your asset portfolio?
We certainly are looking. I'm not somebody who likes to issue shares, however. So if you're going to be looking to make an acquisition, it will be looking at predominantly cash. You'd have to always look at it and say, are you getting more in return for what you're giving up? Because when you issue shares, you're essentially selling a portion of your company, and the grass isn't always greener on the other side.
And so you're retaining the shareholder value.
Correct.
By keeping it very, very tight and illiquid.
If you can build your company off of cash flow, I think that's the ideal method.
Now, for investors who'd like to have a closer look at that, abitibiroyalties.com?
Correct, yes.
And trading on the venture exchange RZZ.
That is correct, yes.
Ian, thank you very much for joining us today.
Thank you for your time today.